The Ether trade that made the most noise last week. A so-called whale placed a large buy order for the bearish put options tied to Ether, seeking protection against an extended price slide to below 400 by the end of June. Full disclosure, I do not trade options, so I'm not very familiar with them. They are risky to me. They make me feel scared. I don't necessarily like them, but we have to talk about it. So last week, a buy order for 50,000 contracts of Ethereum's 400 strike price put option expiring in June appeared on Deribit's order book. I believe that Deribit is owned by Three Arrows Capital. If Will wants to fact check that for me once I'm done. But apparently the order was placed as Ethereum was about $1,300. So the buyer's expecting a 69% slide in 6 months or so. I think the interesting piece here is that the trader paid a premium of 0.0095 ETH per contract, because it doesn't seem like too terribly amount of money, amounting to a total outlay of 380 ETH worth under $500,000. I don't know. I could be wrong there. But Will, give us, do you know if Three Arrows Capital owns Deribit? I believe they're affiliated with them, right?
Yeah, Zach can probably speak to this a little bit more. I believe they had some equity within Deribit, but that was about it. They didn't outright own the exchange. I think Deribit's pretty old exchange. Zach's not along, so that sounds pretty correct.
Pretty sure.
And yeah, if you don't like it, tweet at us at CoinDesk Podcast. We're there to take criticism and feedback. We're always on Twitter. Trust us. All four of us are way too much on Twitter. Let's talk about this.
Chronically Online.
Chronically Online. I feel like I went back in a time machine when I saw this article, though, because this was a big headline, just like the banking stories back in 2020, where a lot of people were making derivative options or calls or puts or whatever on chain or on their favorite exchange going into the bull market, because you can make more money if you place the right call, right? So if you thought that Ether was going to hit 4K, well, you can buy the correct derivative contract at Deribit or somewhere else and make a little bit of money because you bet that the price is going up, and it did go up. So it's a way to make a lot more money, but you can also use it on the way down for a few different purposes, including hedging your risk if you have a lot of Ether and you think the price of Ether is going to go down. So if you want to keep the same USD value for whatever amount of digital assets you have right now, go ahead and purchase a derivative, the correct one, of course, hopefully, because it is sort of a risky bet. And then you can shore up your USD position. Or if you think it's just going to go down, you can make some money on the downside. So we see this in both ways, right? Where a market is going up or down, we see a lot of derivatives here. Hedging is also really important, and this article goes into that at the end of it, where a lot of VC firms or hedge funds or crypto merchant banks out there, they purchase these things in order to protect the USD value of their firm, right? So if you're holding a lot of digital assets on your books, as a lot of these crypto VC companies are, well, it's not always great that you are holding those digital assets because they're so volatile. So you want to go purchase some sort of derivative to shore up your books, make sure that you're solvent no matter what happens with the market. So if you're reading this article, make sure to get all the way to the bottom because there includes some more information there. But to me, this is like time machine. Jen, I'm going to throw it over to you.
Well, I have a question for Wendy. If I'm not a trader, which I'm not, should I be taking anything away from the story? I read it and also was like, "Oh, this sounds freaky," but also not freaky because I'm not trading at this level. So what should I be taking away from this?
You should be taken away from this. That number goes up and up only, always, all the time.
It's always what I take away. So
this is going
we're
down.
good.
No, I mean, it's cool. I really think like if you're not a trader, it's just kind of cool to see that people are still very actively interested in, trading, especially large amounts. A lot of people got absolutely wrecked in this last cycle. So it's kind of good. It's good morale. It's positive because Bitcoin is doing really well. I looked at the chart earlier today. I looked at the altcoin market, and especially some of the metaverse projects like the play to earn or whatever, they're going absolutely wild. So people are making money right now. Again, I don't think that the bottom's in, not financial advice, and just please be careful. Please have an entry, exit, all that fun stuff. But yay, Bitcoin to the moon.
Options do be
Ethereum
scary.
contract, though.
Options do be scary. It's true. Yeah, this is about ETH. I mean, this is, I don't know. Like these are funny. These are the data points that like crypto is awash in that stand out. Like some human actor like placed this thing based on some conviction that ETH is going to puke massively to $400, and more power to that person. It's a market expressing itself in real time. And you see the headlines on the way up where the price is especially high, and you see the headlines on the way down where the price is especially low. That's why Omkar is the best in the business. So thanks, Omkar, for highlighting this one. And thanks also to Will's point for doing some explanatory language toward the back end. Omkar, you the best.